Do you want to buy a house here in the Denver Metro or the Vail High Country? It's a dream for many, but it really can feel super overwhelming at the same time. Everybody's throwing advice your way, family members, parents, aunts and uncles, those HGTV shows, and they make it seem like everything's a walk in the park. But is that really true? In reality, buying a house, especially a dream home here in Colorado, there's a much more complex process involved. There's a lot of research, separating myths from reality, and making sure that you're making a sound financial decision. And this isn't something that you should take lightly. It's a big, massive decision. It could be a game changer, and especially for your finances for years to come. So how do you navigate this process smoothly and with confidence? First, by separating myth from reality. So don't fall for these common homebuyer myths. The first one here is that you need 20% for down payment. Now, that's the first hurdle that most people worry about, which is saving up for a giant down payment or initial investment. In the Denver Metro, the families we serve are typically in the $800,000 purchasing range or higher, and if 20% down, that adds up to $160,000. So you need to know that you might not need that much up front, and we help people buy homes with as little as 3 to 5% down. So if you've saved $40,000, that's 5% of the $800,000 number that we just spoke about. But there is a bit of a twist though. With a smaller down payment, the lender takes on more risk. And of course, to balance things out, they're going to require you to pay a little extra each month called private mortgage insurance or PMI. But don't let that stop you. We can talk about the pros and cons of different down payment options and find the path that works best for you. The second myth here is real estate agents are expensive. So let's tackle this next worry, which is paying a ton of money to us as a real estate agent. In Colorado, every corner there seems to have an agent or a sign or a company that can help you. It's a natural wonder to wonder about the cost. And our commission, a percentage of the sales price, typically comes out of the seller's pocket through concessions or a co-op fee. That's what we tried to get for first. But of course, if that doesn't happen, you, the buyer, will pay that fee. But we've never had any of our buyer clients have to pay our compensation directly because most of the families we've served, of course, we get that paid by the sellers. And the third myth here is you don't call a real estate agent until you're ready to buy. Now, about calling an agent, you might think that you need to wait until you're 100% ready to buy. That couldn't be further from the truth. So even if you're just casually browsing online, dipping your toe in the water, you definitely want to consult a real estate pro like myself because we can be a huge asset. And as a local Colorado agent, I can set you up with a custom search in the MLS systems that we have access to. The multiple listing service is basically a giant database of all the homes for sale. Now, this system is usually more up to date than those public sites like Zillow or Trulia, because that's where they get their syndicated data from, the MLS. Plus, you'll get alerts for new listings that perfectly match your dream wish list. Now, starting your search early with an agent gives you a realistic picture of the market and what you can afford. And the sooner that you can connect with an agent like myself, the much more smooth the home buying journey is going to be. And I can definitely guide you through the entire process from finding your perfect property to closing the deal, all while saving you money on the agent costs. The fourth myth is fixer-uppers are more budget-friendly. So this is a really common misconception that fixer-uppers are saving you a ton of money somehow. Because we've all seen those shows where people snag a cheap house and magically transform it. Of course, that sounds like a dream. Perfect. Well, not so fast, because sure, fixer-uppers might be cheaper at first at just the base price, but all those repairs and renovations quickly add up to a hefty price tag, especially in inflation time like we are in now. But redoing the entire kitchen, putting in a pool, updating bath views, those can cost way more than you would see on those shows on TV. But don't get me wrong, fixer-uppers can be definitely a great option, but you should really want to be realistic about what you're getting into. But if you're open to an older home, I can definitely show you a variety of options. Some are move-in ready and some with more potential for customization. So if your heart gets set on a charming older place that needs some work, let's get you connected with contractors before you make an offer. This way you'll know the true cost of renovations and see if it fits in your budget. Remember, a fixer-upper can be a great way to get the home that you want, but it's really important to be realistic about the extra costs that are involved. And the fifth myth here is that you need a high credit score to buy a house. So let's talk about that just briefly here. There's some sort of myth out there that you need to have perfect credit to buy a house. That really isn't true, and it hasn't been true for some time. So even with less than perfect credit score, there's a ton of loan options available. And as a local Colorado real estate agent, I also have my mortgage broker license and have access to lenders to offer programs to people that have had some bumps in their credit history in the past. So these loans, they might come with trade-offs though. You might need a bigger down payment or a slightly higher interest rate because you have that poorer credit score. But the important thing is to be prepared for all the options. The next myth here, your only upfront cost is your down payment. This one is really important, so let's clear up some confusion about upfront costs. Yes, the down payment might seem like the only hurdle, but there are a few other things to keep in mind. First up, for whatever reason, people forget that there's closing costs. Now, these can range from anywhere between about 1.5% to 5% of the purchase price and cover things like title fees, homeowners insurance, other miscellaneous charges if you want to buy points, recording costs, transfer taxes, inspection, and appraisal fees. So the inspection, that's a very important thing to get checked off by a professional to identify if there's any issues with the house. Think of it like taking your car to the mechanic before you buy it. You want a pro to check it out and just give their stamp of approval, and it usually only costs a few $100s, but it can vary depending on the size of the house. Then of course there's an appraisal, because if you're getting a mortgage, the bank will need to know the market value of the house before they decide that how much they can really lend to you. An appraiser is going to come out and assess the property, and you're going to, of course, be responsible for covering that cost. Now, you want to factor these additional costs into your budget when shopping for houses in the Vail High Country or the Denver Metro, because it'll help you avoid any surprises down the line. Myth number 7 here is that you can't qualify for a mortgage if you're still paying off student loans. Now, don't let those student loans stop you from trying to buy a house. You don't necessarily need to be completely student loan free to qualify for a mortgage. While paying them off obviously can free up some cash flow in the long run on your month-over-month budget, but it's not an all or nothing situation. Now, what really matters is your debt to income ratio, the DTI for short. This is a very fancy way of just saying how much your monthly income goes towards existing debts in a form of a ratio, a percentage. So lenders use this ratio to see what you comfortably can afford if you can afford that mortgage payment. Now, typically a DTI ratio below 45% is acceptable, with 36% or lower being even better. So as long as your debt to income ratio stays within a healthy range, your student loans shouldn't prevent you from getting a mortgage. Now, if you're worried about your DTI calculation, I can definitely help you explore some options. And together, what we'll do is we'll find a financing solution that works for you to find your Colorado dream home. There's no one-size-fits-all answer, and I'm here to guide you through the process. In our Ultimate Home Buyer Experience, we customize our approach for all of our clients. Obviously, buying a home in Colorado can feel overwhelming, but you don't have to go it alone. And as your local Colorado real estate agent, your contact here, I can definitely be your partner throughout the entire process, from finding your perfect property to navigating the ins and outs of financing. Now let's talk about your dream home and how I can make it happen. Reach out today to schedule a free consultation. The best way to do that, forget emailing or texting or calling and just getting in the missed call situation there, the phone tag. Check the link in the top pinned comment or the description, and you'll get a direct link to the calendar of our availability. Just pick one time that jives with your schedule, and we'll definitely get the ball rolling. It can't be easier. And we have a ton of homeowner giveaways, takeaways, like just all sorts of spreadsheets and just goodies, freebies to make the home buying and or selling process that much easier. But of course, you just got to reach out. And while you're here, why don't you snoop around the channel, check out one of these other videos right now. And again, in Colorado, we have such wonderful weather. Get out and enjoy our sweet sunny days. Stay sweet.